Hello everyone, thanks for joining us this morning and welcome to this Specialist Trading educational presentation. Now today I'd like to talk to you about the real truth about overbought and oversold markets, because this is basically trading 101, right? We're all told that when something is overbought it should be sold, and something is oversold it should be bought. And it does work every once in a while. This is the way I was taught when I first started trading over 4 decades ago. But let me share with you what happens a good deal of the time. For example, as we look at this older chart here in LB, we see here that the market has gone pretty much straight down in a downtrend. And let's say you see this bullish engulfing pattern and you're really excited about purchasing this, so you purchase it right there, and then this happens, right? So you say to yourself, wow, okay, this didn't work out too well. But then you look at all the indicators, maybe that real expensive indicator you bought or something you put together for yourself says that things are tremendously oversold, so you have to purchase it here, so you buy some more. And then this happens, and you say, well, it really didn't go down that much. Maybe I'm just getting in a little bit too early. And then you think about that $10,000 class you took on the institutions. For example, they're saying that there's some major support right here. So this is where you should buy. Maybe you want to triple up because this is major support. Maybe this is where all the Fibonacci numbers come in, or the Elliott wave. So you say to yourself, you know what? All I have to do is purchase some more, and I really don't need it to go up all that much, and I'll just break even and get out of this trade. So you buy some more, you triple up, and then this happens, okay? Look familiar to anyone. Well, with this exact same example, I'm going to show you with the help of a few simple tools, you'd actually be able to use the same oversold levels to generate potentially close to 40 points in profit. And you're going to learn all of the rules to this entry technique today. Actually, you're going to see how simple it is to apply it on our new platform. This is the PTS Primo charting platform, the educational portal that makes trading overbought and oversold extremely simple. So this promises to be a great educational presentation today. Thanks for joining us once again. My name is Steven Primo. I'm the president and founder of Specialist Trading. And if you're new to my webinars, you'll find out that we're all about educating you. We are first and foremost an educational company. In fact, that's our only goal. I teamed up with Pro Trader Strategies just roughly about 10 years ago with that one goal in mind, simply to educate traders. And someone would say, well, why don't you just give us the strategies or the systems you have, or tell us what to buy or what to sell? Well, we really believe that that's a recipe for disaster, because if you think about it, the entire industry is based on that. You simply go to a chat room or go to a website or pay for some signal service and they tell you what to buy or sell, or you watch TV and listen to the so-called gurus and they tell you what's hot, what to buy or what to sell. And if that really works so well, why is it estimated that upwards of 85% of all traders fail? Well, it's because that really doesn't work. There's no consistency in taking yourself out of the game. What you need to do is learn how to spot high probability setups and then make your own decisions. Now, a lot of students say, well, Steve, I don't know how to do that. I've never been taught that. Well, that's where we come in. Pro Trader Strategies and myself really have one goal in mind, simply to educate you so that you don't have to rely on anyone or anything else. You can make your own trading decisions. In my opinion, over trading 42 years now, this is the only way one can become consistent. You can't do it by going to some $10,000 class and trading some style that somebody thinks is supposed to work all the time, or you can't do it by relying on the guys on TV. You have to make your own trading decisions. The good news is that we provide you with the education so that you're able to do that. So I'm going to share with you an entry technique that actually you can start using as early as Monday if you'd like. But before we begin, as always, we are first required to share this with you. So please take a moment to view our disclaimer. I'm going to show you a lot of performance results using this specific entry technique today. But please remember that we can in no way guarantee that any of the results I'm about to share with you will be repeated in the future. And also please remember that all examples are strictly for educational purposes only. So as you're taking a brief moment to view our required disclaimer, I'd also like to take this time, if you haven't done so already, to invite you to follow us on Twitter. We have a good crowd here today, this Saturday morning. And I know I see some old faces, but there's a lot of new ones as well. So if you haven't done so already, please feel free to follow us on Twitter. There's a lot of great free information I post on a daily basis, anywhere from signals our strategies have generated to little bits of financial wisdom along the way. Lots of great free education. So feel free to follow us on Twitter. There's our handle right there. You may want to copy that down. Now, as I stated earlier, if you've come here looking for the best market to purchase tomorrow, or the best time frame, or what you should be buying or selling, you've come to the wrong place, because that is not our goal. As educators, our goal is simply to teach you how to trade with the specialist edge. Now, when I first started trading some 42 years ago, I started my career on the floor of the Pacific Stock Exchange. I was on the floor for a total of 16 years. 9 of those years I was a specialist. A specialist is just someone who made markets and roughly about 50 or 60 stocks. Now, believe it or not, even though I had this advanced information more than, even though it was a good, 42 years ago, I knew what the institutions wanted to do. They were entering orders in my book. I had advanced or pre-qualified information about stocks and earnings. But believe me, I couldn't make a dime my first year of trading. It was so difficult. I had been taught all the same things that you're probably taught, and nothing was working in terms of consistency. Sure, I would have a good trade every once in a while, but then I'd give it all back. So I was lucky enough to have some mentors. These were traders on the floor who had been trading about 40 or 50 years each. And they taught me the things that I teach to all of my students around the world, in over 115 countries and in virtually every state in the United States. This is what we call the specialist edge. It's rooted in simplicity, but it's based in one thing, on listening to the market and taking your cue from the market with the help of a few simple tools and indicators. We listen to the market to tell us what to do, not to an outside source, not to an institution, not to volume, not to some guy on TV, but what the market is telling us. Because after all, that's the source, right? That's what we're trading. So why not take our cue from that? So as you can see here, my goal is not to force feed you signals. It's not to tell you what the perfect market or time frame is to trade. My goal is simply to teach you how to trade with the specialist edge. The same edge that has been the cornerstone of my trading and what has sustained me now for roughly 42 years, going on 43 in just a couple of months. Okay, so since this is an educational class today, I want to take each and every one of your questions, but I have a lot of slides to share with you, and if we stop and ask a question like other webinars do for every slide, we'll be here far too long. I don't want to take up your entire Saturday morning. So if you have a question, please wait till the very end. Oftentimes, if you wait till the next slide, your question is answered. So I promise I'll get to all of the answers at the very end of today's presentation. The only question I will answer is the most common, and that is this being recorded? Yes, it is. So if you have to leave early or if you're having technical issues, believe it or not, about a month ago, I recorded a good portion of the presentation where the sound was out for a good portion of the time. We had technical issues ourselves. So don't worry, we will send each and every one of you a link to this recording if you have to leave early or if you're having technical issues, okay? All right, with that stated, let us begin today's presentation. And let's begin, but I want to start out with sharing with you how most people trade overbought and oversold markets. Because remember, we're all taught to buy when something is too low and to sell when something is too high. It stands to reason, right? Buy low, sell high. But if that were so simple, then why do, once again, roughly 85% of all traders fail? There's got to be something we're doing wrong or something that doesn't have a high level of consistency. So let's look at this chart. Okay, here's an older chart in VRSN for educational purposes only. I'll start out with sharing with you some older charts, and we'll look at some charts that are a month or two old. Then towards the end, we'll share a chart that just happened last week. Now, if you're going to be trading overbought, oversold scenarios, usually you have some type of tool, some indicator that generates an overbought or oversold condition. Now, in this simple chart, I just have the stochastic oscillator plotted on the bottom. But please, whenever I do this presentation, most people say, well, Steve, can you tell me exactly what that indicator was? Because I love this technique, and what were the settings so I can do the exact same thing? It makes absolutely no difference. You can use any indicator, any tool, or something you've devised yourself. In fact, it doesn't even have to be an indicator. It can be what someone is saying. But we just want to know when something is in the so-called overbought area and in the so-called oversold area, all right? So don't get fixed on that it has to be this indicator. It could be any overbought, oversold tool. It can be something you devised. It can be someone, what they say in a newsletter, something's overbought, oversold, okay? Now on this basic standard oscillator, stochastic oscillator, which I haven't changed at all, I just plotted it on our platform. If price, or I should say, if the indicator is above this 80 threshold, that's the so-called oversold. And if it's below the 20 threshold, that's the so-called oversold, I should say, and this is the overbought. All right, now how this usually works, the way we've been taught is that if we go in the so-called overbought area, we want to wait for the indicators to cross over. And once they do, that's our sell. Okay, that's our sell indication. Now, sometimes a more conservative, you wait for price or the price of the indicator to go back below the threshold. Either way, that's where you want to sell. And as you can see, price here in VRSN goes lower. That looks pretty good, right? So you got a nice little profit. You wait for the indicator to come into the so-called oversold area. And then when the indicators cross again, you cover your short. And if you want to, you go long. It takes a little while to kick in, maybe a week or so, but guess what? It's starting to go higher. So now you've got a profit in the short, and now you're going long, and you've got a profit to the upside. Now the indicators cross again, so you get out of your long position and you go short. And at this time, you're thinking to yourself, this is just too easy. I mean, I'm probably going to make so much money I could retire in about 6 months or build that addition to my house that I've waited for, or maybe go on that dream vacation. This is just too easy. Trading is really simple. So you've sold right here on the next indication, but guess what? This time it really doesn't go down. And you're following the indicator and it never comes in the so-called oversold area. So you say, wow, well, maybe I got in a little bit too early. So we're in the overbought area again. So we crossed, so I'll sell some more, what we call doubling up, okay? So you sell some more and wow, this time it really goes up. So you say to yourself, wow, okay, well, I've got a loss now. What should I do? Should I just get out? But you can't do that because then you're kind of conceding that this doesn't work. So you say to yourself, well, listen, we're in the overbought area again. I'm going to sell some more. I'm going to triple up because, once again, I won't need it to come down very much, and I'll just break even. And that's all I need, all right? I just need to break even on this one to get recalibrated. So you sell some more, and this time it really doesn't go up again, but it doesn't go down either. And you're waiting for this to get in the so-called oversold area so you can at least get out, but nothing's happening. So you say to yourself, wow, this one's not working the way the first three worked. So you say, well, you know, we're in the so-called overbought area again. Why don't I quadruple up? Gosh, if I sell some more, you know, I just need it to come down a little and I'll break even, maybe even make a little money. So you sell some more and this happens, okay? This is how the majority of traders are taught to trade overbought and oversold scenarios. And like I said earlier, I was taught the exact same way when I started on the floor. Now, this will work every once in a while, maybe once out of every 3 trades. But it's those 1 or 2 that don't work, like you see right here, where you give everything back. And this is not the correct way to trade. Trading should not be like gambling, all right? But unfortunately, this is like the slot machines, because the slot machines, which are the statistically worst thing to play in Las Vegas or any gambling establishment, they are designed to give you a winner every once in a while so that you'll stay there, all right? And so it'll give you this false sense of security that everything's going well, but they want you to stay there because they know ultimately the odds are in their favor and you're going to give everything back. Trading tops and bottoms in this traditional way is the exact same thing. You will get a winner every once in a while, the way you first saw here in the very first couple of trades. But if you stay there long enough and trade this way long enough, you will give it all back. Take it from someone who's been there. I traded this exact same way over 4 decades ago, and it didn't work then. It's not about to start working now. Now, it doesn't matter if you're using a stochastic oscillator or some tool that you've devised or some great way to look at the institutions or some great way to listen to some guy on TV. It makes no difference. But if you're trying to pick tops and bottoms, over a while, you will give everything back. So you have to ask yourself, I mean, I was at my wit's end because I had been trading like this and other conventional wisdom styles for a good year, and I didn't think I was going to be trading much longer because nothing was working consistently. I was lucky enough to have some mentors on the floor that saw how much I was struggling, maybe the way some of you are struggling right now. And they taught me something that has stood with me the entire 42 years I've been trading, and this is what I'm trying to instill in you. This was the very first thing they said to me. They said, Steve, you must grasp this concept. There is no such thing as overbought or oversold. All right? I want to say that again because this really is important, and it goes against everything you've learned and been taught. But this is the truth. There is no such thing as overbought or oversold. Okay? It's a myth. I mean, think of it. How many times have you seen a market, stock, future, currency pair, go up, be in the so-called overbought area, and continue to go up for days, weeks, months, even years? Or you've seen a stock, a future, a currency pair being in the so-called oversold area, and you say to yourself, wow, this is so oversold. It can't go any lower, but it continues to go lower and lower and lower. Do you ever, any of you remember a stock called Enron years back? That went down to zero. It just kept going, and finally it just went down to zero. It wasn't worth anything. It's the same thing with any type of trading, any market, any time frame. There is no such thing as overbought, oversold. Now, when my mentors taught me this, I said, I can't believe this. And it took me a while to grasp it. I continued to go back to the same way I was trading. And over the next weeks and months, I realized that, you know what, maybe they're right, because it's still not working. So finally, when I grasped this concept, I said, okay, I'm ready to believe you guys now. There is no such thing as overbought, oversold. So if there is no such thing as overbought, oversold, then what is the correct way to trade these scenarios, this environment? And they said, Steve, the right way to trade overbought and oversold markets is simply to go with them. And I said to myself, go with them. How do you go with it? What does that mean? But this is the entry technique I'm going to teach you today. And you're going to see how powerful it is, because it's based on trading these things that don't work. And we're going to exploit them. The same place where people are looking at overbought and oversold areas, we're going to take advantage of that, because we know that there's no consistency in that, okay? So please remember that when I teach you this today, this is just an entry technique. I know a lot of you, your eyes are going to light up and say to yourself, wow, Steve, this is amazing. But where do I place my stop? Where do I exit? Okay, how about money management? How exactly do I trade that? Well, remember, those are all the important things that have to do with a system or an actual strategy. Those are all pieces of the puzzle. What I'm teaching you today is just one piece. That's the entry, okay? So now remember, I see some people are asking questions. Remember, save the questions till the end. I see someone has some difficulty with hearing. I just want to take a quick heads up to all of you. If you can hear me all right, please go to your question and answer box and just type in yes or no, okay? I just want to make sure before I teach you this technique that everyone is able to hear. Oftentimes, as I stated earlier, many times it's your own internet connection. So if you're not able to hear me, just log off and log on back on again, and many times it'll be corrected. Okay, I see that everyone is able to hear. Thank you so much for replying. So I think it's just this one attendee's issue. So if you're having difficulty, just log on and log back in again and you'll be okay. Oh, great. I see you just did. Great. Okay. Okay, so once again, this is just an entry technique. I know that whenever I do this presentation, the first question I get is, Steve, where do I sell? Where do I exit? Or where do I place my stop? You're going to have to come up with those questions. In our courses, we teach you all of this. But in this particular class today, I'm just giving you an appetizer, all right? Okay, let's start out with sharing with you how the proper way is to trade overbought and oversold scenarios, okay? What is the truth about them? And remember, you can use virtually any indicator you want. I'm going to stick with the standard oscillator, the stochastic oscillator, but it doesn't matter. It can be any oscillator. It can be any tool that says something is overbought, oversold. We don't care. What we're going to do is exploit that. So it doesn't matter which tool you're using. It just means that whatever generates that, it can be someone on TV that every day tells you something is too high or too low. We want to exploit that. All right, so don't get caught up and fixed in thinking that it has to be this stochastic oscillator. It makes absolutely no difference. All right, I just clicked on stochastic oscillator. That's all I did. I didn't look at the settings. I didn't care. It just doesn't matter. I just want to exploit that. All right, so let's look at VRSN again. We had a couple of good trades here using the traditional way of trading overbought, oversold, and then when the stock decided to go straight up, we gave everything back. All right. How would we do this? All right, well, here's what my mentors first taught me, and this is what I teach all my students around the world. The very first thing you have to do is add something. And what you want to do is add the buy-sell line. Now, on our platform, we have it right here in the upper left-hand corner because we make it easily accessible. And starting at the far left, that's the first thing you should always add to any chart, any market, any time frame. So it doesn't matter if this is a stock. It doesn't matter. We could be plotting the currency pairs, or we could be plotting a 5-minute chart of the E-mini. It makes no difference. But you want to add the buy-sell line. And people go, okay, I get it. So I have to pay for this buy-sell line? No, because the buy-sell line is simply the 50-period moving average. But that's going to tell us whether we should be buying or selling. Now, we have 4 different and really unique ways of viewing the buy-sell line. Let's just use the standard 50-period moving average. You just click that on, and you'll see it right here, okay? Now, the first thing you do is ask yourself, where is price in relation to the buy-sell line? I'm going to repeat that again. In fact, you may want to copy that sentence down and post it onto your screen. Always ask yourself, before you buy or sell anything, ask yourself, where is price in relation to the buy-sell line? If price is below, we'll only be a seller. But as we see here, price has been above. So that means we're going to only be a buyer. Do you see how this automatically eliminates half of the choices you have? You're only going to be buying, all right? So there's no reason you would have been shorting this all the way up and losing money. Because remember, as I said in the beginning, we're only listening to the market. And the market is our source. It is what we base our trades off of. So the market is telling us it wants to go higher, so we're going to go along with it. We're never going to get our ego in the way and try to fight it and say, well, according to this indicator, or this guy I follow on TV, or according to the institutions, this has gone up high enough, so I'm going to sell it. That's silly. There's absolutely no consistency in that. Remember, I traded that same way over 4 decades ago. It didn't work then. It's not about to start changing and work 4 decades later. So if we're only going to be a buyer, then what do we want to do? We want to exploit all these traditional so-called overbought areas, because this is where everyone was selling, right? And we know there's no consistency in that. So what we want to do is locate where these overbought areas are, regardless of what tool we're using, and then we want to identify all the short-term tops that were generated in those so-called overbought areas. The short-term top is where you had a little topping formation. All right, as we have represented here by this green horizontal bar. And here's the entry technique. Once you trade 1 or 2 ticks above that, that's where you're going to be buying. And now, where you had a couple of winners and then you gave everything back, here you have nothing but winners because you're just buying in sync with the market. Now, we always tell our students to get the biggest bang for your buck, you should take the very first one, because that's usually at the bottom if this works. It doesn't work 100% of the time, but if this works, you'll have a very, very nice upward move. And potentially, had you taken that first setup, you could have potentially captured 14 points. All right, you see how simple this is. Let's look at the opposite side, that LB. Remember we showed you this in the very beginning of the presentation? All right, we're going to use the same stochastic oscillator, but it absolutely makes no difference. And what we want to do is first apply the buy-sell line, because it's going to tell us whether we should be buying or selling. So we apply the buy-sell line, the 50-period moving average, and then we ask ourselves, where is price in relation to the buy-sell line? All right, once again, you should write this down, put it up in a little Post-it on your screen, and always ask yourself this before you take any trade. I don't care if it's this technique, one of your strategies, some $10,000 system you bought. Always ask yourself, where is price in relation to the buy-sell line? Makes no difference what time frame or what market. And if price is above, as you saw earlier, we'll only be a buyer. But in this case, where is price? Price is below. In fact, it gave you an early clue, an early warning way in advance. So remember, we were buying this all the way down and we kept losing money, thinking like, well, you know, the institutions are buying right here on the support, and well, it's so oversold here, you got to buy it. It's silly. Why not just listen to the market? The market's telling you, in fact, it told us way up in advance, way up here, that it wants to go lower. And the market is our source. We take all of our signal from the market. So if the market's telling us it wants to go lower, we want to be in sync with the market. We don't want to fight it. What good is it to try and swim upstream? Just swim with the current at your back. So if the market wants to go lower, we are a seller. And this means we're going to take advantage and exploit all of the so-called traditional oversold areas, because we know there's no consistency. There's no such thing as oversold. If we believed in that, well, look, it was oversold here. How well did that work? Okay. Well, it was oversold again right here. How did that work? Well, it's oversold again right here. How did that work? There's no such thing as overbought or oversold. So now that we've located the traditional oversold areas, what we want to do is identify all of the short-term bottoms that were created while we were in the oversold area, not when we were in the regular area. I know there's some bottoms created here, but only the ones in the oversold area, because those are the ones we're going to exploit, because most likely if we trade below that, we're going to continue to go lower. All right, so once we trade 1 or 2 ticks below, that's your sell. Had you taken this very first setup, potentially you could have captured 40 points to the downside. All right, so this is the concept. This is how simple trading can be when you release and let go of all these so-called traditional things that really show no levels of consistency. Now, sure, if you want to go to Las Vegas and stay at the slot machines for the next couple of hours, you say, well, Steve, I'm just having fun. I'm just using money that I don't really need. That's great. But you should never have that same mindset when you're trading with your hard-earned money. Trading is a business, and you should never just throw away your money using these worn-out techniques that show no levels of consistency. All right, so now you have the basic concept for this entry technique. Let's look at some more examples, but please remember, as I stated, this is simply an entry technique. You have to come up with your own examples or with your own ideas of stop placement and exiting. I'll just throw something out here. Let's say you placed your stop, you went long, and there was a pivot, let's say 5 points lower, okay? All right, a short-term low, 5 points lower. All right, you may want to place your stop there. That's a very natural and generic place to place your stop. So if you're willing to risk and lose 5 points, then the only common place to exit would be to double that risk. In other words, you want to make twice what you're willing to lose. So if you were willing to lose 5, well then if you get to a 10-point gain, you should get out. That's a very simple concept. Okay, I'll just throw that out there. But remember, in the class we have upwards of 6 or 7 ways to exit, place your stop, and to enter as well. Okay, so let's look at some more examples just to give you an idea how this works. Here's an example in Casey. This was going back to the beginning of the year, or I should say summer. This was a few months ago. Obviously, if you tried to sell this, you would have had a very difficult time. But guess what? Look at all the traditional overbought areas. It was telling you the entire time it was overbought. You see how there's no consistency in that? The best thing is to apply the 50, and the 50 period told us well in advance it wanted to go higher, even before this big gap up. We had consecutive closes above. So we identified the overbought areas. We identify the short-term tops. And once we traded one tick above, that's all you need to do. Now, had you purchased the first one here, potentially you could have captured upwards of 15 points to the upside. All right, let's look at Cisco, CSCO, all right? It was going well here, kind of sideways. Someone could say, well, Steve, we're just in a sideways market. There's real no clue. But if we added the 50-period moving average, we're not concerned about the oversold areas yet. But if we added the 50, we see here that right here at this point, we had consecutive closes below. So we don't want to buy this. Even though it's going sideways, we want to be a seller. All right, so we want to exploit the traditional oversold area. We identify the short-term bottoms, one here and one here. Had you taken the very first one, 8 points. Now, a lot of our students say, well, Steve, I just use this as a stop placement. Let's say you were long in your portfolio CSCO, and you said, I'll just use this as a point to get out. Okay, that's great. You just saved yourself 8-point loss if you were still holding this as a long investment. How about the PAGs, all right? Now, let me ask you a question. Do you think you would have done well trying to pick a top in this? But for all intents and purposes, look at the overbought areas. We were overbought the entire time. But if you use this simple technique, once again, potentially you could have captured upwards of 15 points. How about letter W, okay? Once again, what if you were long this in your portfolio and you wanted to get out? Or what if you wanted to go short? Well, look at the oversold areas. We were oversold here. It held for a little bit, even had a small bounce, but how long did that oversold hold? And now look, we're oversold again, but we continue to go lower and lower and lower. Trust me, these things don't work. Don't rely on overbought and oversold. It's better to rely on the 50-period moving average. Right here, you had an idea that the market wanted to go lower. So you could have used these to sell. Now remember, we're not talking about stop placement because it did go higher. For all we know, you could have placed your stop right here against this top, all right? Now, once we went into the above the 50, someone could say, well, Steve, we're supposed to be going long here, right? But we never really got any setups. Or even if you did use this setup right here, you could have been stopped out at this low and then got back in and made it back. This is what we mean by consistency. Even if you used a technique going against it that lost you money, you have to still stay in the game. Because let's say you lost about 5 or 10 points. Well, what if you went back in? You would have made it all back. So this is what we mean by consistency. It doesn't mean that you're not going to have losing trades. You will every once in a while. But what you want is a method that's able to recoup those losses. Let's look at an example here in SHAK, S-H-A-K, all right? How well would you have done trying to short this? Sure, someone could have said, whoa, look at all the resistance right here. This is the institution selling. You've got to sell this because this is a double top and there's no way it's going to get through this mass resistance. Well, how well did that work, okay? The easiest thing in the world, regardless if you decide to trade this or not, is to first apply the buy-sell line. And price has been above the buy-sell line going back to May of this year. and coming into August and September, we were well above the buy-sell line. So you know you should never have been thinking about selling this. If you use this technique where we exploited overbought areas, you had 4 different chances to find tops. You could have taken the very first one and potentially captured 30 points to the upside. How about NEWR? Okay, kind of in a choppy market, going back and forth. Let's see what the buy-sell line tells us, though. The buy-sell line tells us it doesn't matter. Every time we bounced, we were below the 50. Even though we had a close above, we quickly had a close below. A close above, a close below. So not enough consistency above it to tell us that price wanted to go up. Now, if you use this technique, all we want to do is exploit the oversold areas. Had you taken the very first example, potentially you could have captured 38 points to the downside. Now, someone could say, well, Steve, sure, there was some bad news or something happened where we gapped down here. Well, well, sure, anyone's lucky when you have some bad earnings or some bad news come out. That's right. If you're on the right side, that's a very fortunate position to be in. But we didn't know. We never followed the news. In fact, it's not required in any of our methods to follow the news or to look at earnings or to look at economic reports. I mean, you can if you want to. Remember, we're an educational company. We're just trying to educate you with what has worked. But I stopped looking at the news some 40 years ago. My mentor said the same thing I teach my students, that there's absolutely no reason to look at any news event if you are intermediate to short-term trading. Now, sure, if you're investing in a company, you want to know about the inner workings of the company and the CEO and the direction of the company. But if you're looking at daily bars or weekly bars or even hourly bars, there's absolutely no reason. So someone would say, well, then how did you know this was going to gap down? We had absolutely no idea. But the easiest thing we knew was that price was below the 50. The odds will be in your favor if you use this simple tool, the 50-period moving average, or what we call our buy-sell line. All right, so let's look at some other markets and time frames, because we know that not everyone is going to trade daily bars of stocks. In fact, we can look at weekly bars. Here's Roku, ROKU. All right, it's been going straight up ever since last year. Someone could say, well, gosh, I wish I would have known this was going to go up. Well, no one knows if something's going to go up, but we can listen to the market. And if we apply the buy-sell line, well, we knew right here in February of 2019, this year, that we wanted to go higher because we had 3 to 5 closes above. So if we want to use this technique, we're overbought right here. Here's a short-term high. We're overbought right here. Here's another short-term high, and then still another one based off this overbought area. If you had taken this very first setup in May, potentially you could have captured 70 points based off weekly time frame. And nothing changes. We don't change the rules because we went to a different market or a different time frame. In fact, we look at letter M here. If you had this in your long-term portfolio, you would have lost a lot of money because this stock has gone consistently lower ever since 2018. This is a weekly chart. And if you held on, this is what most investors do. They say, well, it's bound to turn around, right? It's a $40 stock. It's going to come down. Well, it lost over 50% of its value. And this is the way most investors will invest. If you apply the 50-period moving average, you would have seen that, well, right here in December of 2018, you had consecutive closes below. So you should have exited this roughly around the $28 to $30 level. And if you wanted to go short, well, you could have applied this technique and potentially captured 12 points. But either way, you could have saved 12 points losing if you were holding on to this position. You could have used this as an exiting technique as well. How about the British pound? All right, we can also apply this to currency pairs. It makes absolutely no difference. Nothing changes because we are looking at a different market. The same thing applies. We apply the 50-period moving average, which is our buy-sell line. Click it on, and as you can see, we've been below the 50-period moving average. Even though we had one close above, we immediately went down. That's not enough to tell us that the trend has changed. So we're still going to look at this from a shorting point of view. Now, we are below the 50, so we want to exploit the so-called oversold areas right here. We're not even going to consider going long. And someone can say, well, Steve, you didn't look at the economic report, the news, what's going on economically in Britain or with the pound? No, I mean, if you want to, you can, but we don't teach any of that. There's absolutely no reason because we know that we should only be a seller in this until we get consecutive closes above the 50. So if we're going to be a seller and we want to exploit this, we can use the same exact technique, find the short-term bottoms, and in May of this past year could have gone short and potentially captured nearly 900 pips to the downside coming into September. How about a 10-minute chart of the E-mini? Okay, nothing changes once again because we're looking at a different market, a different time frame. Someone could say, gosh, boy, the market went up straight up here just a couple of months ago. Well, if we apply the buy-sell line, the 50 period, you would have known well in advance that market wanted to go higher. Now, it doesn't predict how high. We don't predict how high or how low something will go. We just give you the information of which direction it wants to go currently. So you want to be a buyer. Use the same technique, but this time we're going to exploit overbought areas, identify the tops, and had you taken the very first one, potentially you could have captured 35 points to the upside in just a couple of days, okay, on a 10-minute time frame. Now, I know a lot of you are saying, okay, Steve, well, you know, the markets were a lot more volatile. I see most of these charts are going back to the summer, just the last month or so. Well, let me share with you what happened this week. In fact, this was just the last few days. I'm an intermediate trader to short-term trader. I like to trade intraday E-minis. Now, let me show you what happened in the last 2 days. We had a nice upward market on a 30-minute chart of the E-mini futures, okay? Now, people were saying, gosh, you know, that earning or that news about the tariffs caused the market to go up. It looked terrible, and then it went up. I mean, gosh, I got caught off guard. I had no idea the market was going to go higher. I intraday trade the E-minis too, but I was short. Well, you have to ask yourself, based off what? Okay, based off traditional wisdom, because we know there's no consistency in that. The first thing you want to do, even on a 30-minute time frame, is apply the 50-period moving average. And we're going to exploit these so-called overbought areas. Now, once we added the 50, we see here that the market told you. Before any news about tariffs came out, the market told you it wanted to go higher. So we don't have to follow news. There's absolutely no reason. We knew on Thursday, well in advance, we had consecutive closes that we wanted to go higher. So there's no need to follow any news. If the market wants to go higher, that's the only thing we're listening to. All right, so if we add this technique where we exploit then the overbought areas, if we had taken the very first setup right here, which is on the close, I believe, on Thursday, well, potentially we could have captured upwards of 45 points coming into yesterday's close. That's over $2,200 with just one contract. That's just one simple technique I've taught you today. This happened in the last few days. So do you think this could have helped you? All right, let's recap before we go into question and answer portion. Remember, as my mentors taught you, as my mentors taught me, I'm trying to instill in you the same exact thing. And as soon as you grasp this concept, I really feel strongly that the sooner you will become a consistent trader. And that is, there is no such thing. I repeat, there is no such thing as overbought or oversold. It's a myth. You've just seen that markets will continue to go higher and higher and higher for days, weeks, months. And the same thing with they'll go lower and lower and lower for days, weeks, or months. So trying to pick a top or bottom is just silly. It's a gambling mindset. And most gamblers fail. That's why, in my opinion, most traders fail. Upwards of 80 to 85%. Because you're using outdated things that simply hold no levels of consistency. So if there's no such thing as overbought or oversold, please never, ever try to pick tops and bottoms. You're basically swimming upstream. You're going against the tide. It's much easier when you swim with the current at your back. All right, so ask yourself, before you ask me questions, do you think this edge could have helped your trading this past year? All right, how would you like some more edges? How would you like some more access to really high probability setups like this? Well, we have a great offer for all of you that took time out of your Saturday morning to attend this presentation. We're going to offer you our platform. That's the PTS Primo charting platform where you saw all the chart displays were generated from. A 30-day trial for only $7. Now you can apply this technique on there just as well, but we have a lot more edges on this and you can take advantage of them on your 30-day trial. For example, we have a position sizing calculator that I gave a webinar just a few weeks ago that automatically determines the correct size of your position according to proper money management, all right? We also have an indicator I developed with Pro Trader Strategies. It's our strength of trend feature. Many times you'll be in like, for example, you saw these examples where you said, wow, this is going straight up, but where do I get out? This is a great tool that you can apply to any chart, any time frame that will really help identify when a trend is either still strong or running out of gas. It's a great tool that will help you with your decision-making process. We also have our enhanced buy-sell line. Now, you just saw the 50-period moving average, but we have 3 different ways to view that. All right, all our different features, they're very unique and innovative. That comes included with your platform trial. We have a short-term pattern feature, which also identifies the short-term trend. We have over 90 of the most prominent technical indicators to experiment with. We also have designated Bloomberg TV, and we have great personalized tech support. So if for any reason you're having trouble loading a chart or watching a video, a lot of this comes with video information so you can watch and learn at your leisure. We will have a great tech support system there designed to help you fix and reissue whatever it is. This is over 42 years of information that I've accumulated that I currently use in my own trading. It's yours to check out and experiment with for the next 30 days, only $7. So think of it. You can go out and have coffee today, you and your significant other. It's going to cost you more than $7 just to get 2 cups of coffee. That'll last for about 20 minutes or 30 minutes, and then it's done with. This will last you 30 days, and then you can make up your own mind whether it's your cup of tea or not. But you'll be able to use all the same things that I currently use in my own personal trading. So here's how to take advantage of this. Contact Pro Trader Strategies. Remember, I teamed up with them roughly 10 years ago with our only goal is simply to educate you. You can email them directly at trading@protraderstrategies.com. Call them directly if you have any more questions about the platform or tech support at 310-598-6677. Now that link below will take you to the sign-up page for the $7 offer. It's not a live link, but we have posted a live link in the chat box. If you go to the GoToWebinar column on the far right, you'll see that there's a live link posted there, so you can basically use that and we'll take you to the sign-up page, okay? I'm going to leave this information up here while I answer any of your questions. So if you have questions, please, as I promised, go to the question and answer box and type them in, and I promise I will answer each and every one of them, okay? Let's see here. Let's see, someone is asking about what is the price of the platform after the 30-day trial. I believe it goes up to $97, but remember, that's your decision. You don't have to take it if you don't want to, but to tell you from personal experience, most of our students continue to go on a month-by-month because it's a really great offer and you have just tons of information. Remember, I've packed it with all the things that I currently use and I've accumulated in 42 years, and there's just tons of great, consistent tools and ways in which to trade. One thing I didn't mention, once you become a student of ours, even with the platform, the 30-day trial, you get my personal email address. You can ask me any questions. So if there's a technique on there that you're not really sure about applying, you can contact me and I will email you and tell you exactly how to do it and point you in the right direction, okay? So that's another great perk that comes with this 30-day trial. Janky asks, what is the strategy do you use to exit? Well, didn't I tell everyone at the beginning that someone's going to ask me what do I use to exit this? Well, remember that we have tons of different ways to exit this. This is just the entry technique. There's lots of different ways. As I stated earlier in the presentation, you can simply double the risk. So if you risk 5 points, your exit would be double whatever that risk is, okay? A very simple way in which to do it, okay? Someone is also asking, can you enter orders off this? No, this is not an order entry platform. This is simply an educational platform, but I use it the same way. I will toggle back and forth onto my platform that I enter my orders, and then I'll go back and look for setups and signals on the platform. Remember, we are an educational platform. Everything on the platform we teach you how to use, and we teach you all the rules so that you'll know how. So regardless of what platform you're looking at, you'll know right off the bat where a signal is generated or what to look for, okay? Okay, as we close, I guess there are no more questions. Remember, this is a great offer. Take advantage of it. Over 4 decades of information that I currently use in one platform for $7. I mean, trust me, you probably spent more than $7 in commission costs this last week, but this is information that will last you a lifetime. So contact Pro Trader Strategies if you happen to come up with another question. They'll answer anything that you'd like. And please, take advantage of this, and you can decide for yourself after 30 days if it's your cup of tea. And if you have more questions, contact Pro Trader Strategies at 310-598-6677. As we conclude and take one last look at our disclaimer here, remember, this is a great entry technique, but please paper trade with it for a while. I know a lot of you are going to want to jump into it right on Monday morning, but please, you'll most likely not have very good results because you haven't studied it enough. You'll not apply the 50-period moving average, or you'll look at the rules improperly. So study this video. You'll all get a video of this presentation. Study it until you really feel confident, okay? Thank you so much for attending. I wish you the best of luck, and I look forward to all of you becoming students of mine in the PTS Primo Charting Platform Trial. Thank you so much. Have a great weekend, and I shall see you next time. Bye-bye.